Hey everyone, welcome back to the PIMD podcast. Hope you've had another great week. This is Peter Kim. And this week we're going to tackle a question that I tend to get all the time, whether I run into people at meetups or conferences or events. And it goes something like this. I've saved up $100,000 and I want to start investing in passive real estate. What should I do with it? Now, it's a crazy question because there's so many different ways to answer this, but for some reason, I think people think I have all the answers. But of course, I want to try to provide some value. I try to give my insight based on the mistakes I've made and what I've learned. And I want to share that with you today. So stay tuned.
Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show.
Hey everyone, how's your week been? Have you had another crazy week? I still remember those days where, again, you're driving home from work. Maybe it's the end of the week and you're like, man, I am just tired. I've been through a lot this week. I can't wait that it's over. I mean, I'm so happy that it's over. I've got the weekend or whatever it is, or it's Monday and here's another week and I can push through it. Again, I just want to encourage you that you're doing incredible. You're doing amazing work, especially stuff that's meaningful. And you've got an amazing community around here to support you if you need. And if you've ever wondered like how to put six figures to work, how to invest $100,000 or more, especially as like a full-time physician, and you're juggling a demanding schedule, we're going to be talking about that today. I'm going to walk you through exactly what I do if I were starting from scratch with that amount of cash today, which would be a nice thing to have, based on both my personal experience and then what I've seen work best for physicians in our community who are just beginning their investing journey. So let me just start with this. If this is your first investment, I would not put all $100,000 into one deal. Now, just a disclaimer here. I'm not a financial advisor. I'm not telling you how to invest. I'm just letting you know from my experience what I would do. Ultimately, you have to figure out what works for you. Now, I know it's tempting to go ahead and go all into one deal. Now, certain deal that you get, and I will say more deals than not, look incredible on paper. All these high returns, you start dreaming of what that money will do. There are pictures of a nice property. They're really impressive photos, but going all in right away, that's less like investing and reminds me of being at the poker table. I mean, I feel like that is gambling. Like you go all in. Instead, I take a more strategic approach, like one that protects your capital, builds your confidence as you go, as you learn, and accelerates that learning so that you can make smart decisions down the line. So if I had $100,000 to invest today, and this is at the very beginning of my investing career, I'd probably just split it up into 25,000 chunks. And here's why. Number one, you get diversification of sponsors. Now, sponsors are the people that run these deals. Real estate syndications are ultimately only as good as the people running them. Sponsors matter. I always like to say it's like the surgeon who holds the knife. Who is holding the knife when you go under? Now, when you invest with different sponsors, you get the chance to observe how each one operates. Like, how do they communicate? Do they actually perform? Do they respond when things go sideways? Hey, everyone, I have a quick question for you. Are you looking for a secure and reliable long-term investment strategy? Meet Eckert Enterprises. It's a family-owned and operated firm with over 35 years of experience specializing in U.S. energy and alternative investments. Here at Passive Income MD, you often hear me talk about the need to diversify. One of the safest investment strategies available today are mineral rights. And with Eckert Enterprises, you can diversify your portfolio. Their team is committed to helping private investors like you and me identify and develop successful diversified portfolios. With an average return on investment of over 24% across their portfolios, the Eckert team is dedicated to helping you build and protect your wealth through long-term passive income. All of this while minimizing the risks associated with traditional investments. So check out Eckert Enterprises. If you want that great investment experience, go to EckertEnterprises.com. Again, that's EckertEnterprises.com. Hey everyone, this is Peter Kim. I've got some exciting news for those of you thinking about taking your career beyond clinical medicine. PIMDCon 2025 is officially happening this September 25th through 27th in Newport Beach, California. Now, this isn't your typical conference. It's designed specifically for physicians like you, those who are exploring side hustles, thinking about starting a business, or wanting to learn how to invest in passive real estate. Now, at PIMDCon, you'll hear from top experts, investors, and entrepreneurs who've been in your shoes and are ready to share what works. Now, we built this event with you in mind, with tailored tracks focusing on real estate investing as well as entrepreneurship. So whether you're just starting out
or looking to scale, there's something here for you. And if you can't join us in person, we've made it easy for you to participate virtually from anywhere. Now, if you've been thinking about creating more freedom in your life, financially or professionally or time, now this is your chance to take the next step. So head over to PIMDcon.com to grab your ticket. I hope to see you in Newport Beach. It's going to be an incredible weekend of learning, connection, and inspiration.
Number two, you get diversification of markets. Why? Because each real estate market behaves really differently. You probably heard that saying that real estate is local. You even notice in your own neighborhood, you want to be on one side of the street, but not another because of the school district or whatever it might be. It's the same way that a multifamily deal in Dallas or Baltimore or Phoenix might act completely different. By spreading your investments across regions, like you get a more balanced exposure and you start to understand what drives performance, why certain areas do well or not. Again, it'll accelerate your learning. Also, if you spread your bets, you can get diversification of asset classes. We all know apartment buildings, otherwise known as multifamily, but that's just one of the many asset classes that you can invest in. There are things like office, retail, self-storage, assisted living. Like I would tell people, try a mix. See what works for you. They all have different characteristics, and you get insight into how the different business models will work. And you got to figure out which ones ultimately fit your goals and your comfort level and the level of confidence that you have. And you're probably not investing all of those 425,000 chunks all at once. So it gives you a chance to learn as you go and be patient. You're going to have some capital ready when a deal that you absolutely love comes along in the next month or two, whatever that might be. Like you don't have to deploy everything at once. And sometimes the best move is to spread it out over time. So when I first started out, yes, in so many ways, I looked at the returns and I thought they were incredible. But what I was really chasing was experience. And what I meant by that was that I wanted to learn how deals worked. I wanted to learn how distributions were paid. And I wanted to learn how to vet sponsors. I mean, again, to be honest with you, that's not how my first deal went. But after my first deal and I started figuring out that I need to know more about this, those are the things that I chased more than returns. So I did spread my bets. I put the minimums in the beginning. And then by being in 4 different deals and seeing how they operate and asking questions for different people, I learned more than I ever would have if I was just in a single deal. Even if that one deal hit it out of the park, I think for the long term, having that education would serve me even better. Then out of this, you start to develop this inner sense, otherwise known as intuition as an investor. We should definitely invest with our heads, but there's a certain level of confidence and gut that you have that you want to put behind you when you actually invest in a deal. So you can figure out who you can trust and who you think will ultimately help you invest in a good deal. Like that stuff is priceless. And why this works for us is that as physicians, we're so busy. We often don't have time to manage our own properties. We don't want that second job. We don't even have time to do full underwriting of deals. Now, what I mean by that is learning the entire market yourself, every single property, all the numbers. I mean, that's why passive real estate investing, like in syndications and funds, can be so attractive to many physicians. But the nice thing about these deals is that you still have the ability to make intentional, informed decisions. Like this strategy doesn't just build wealth, is what I say. I say it builds freedom over time and it builds wisdom. The more you learn, the more data points you get, the more it prepares you to make bigger and better investments down the road with far more confidence. And by the way, if you want to see exactly how I invest $100K into passive real estate investments as a first-time investor, like I put together a free, like 1-page guide for you. If you want to see it, it's called the 100K Real Estate Investing Blueprint for Physicians, absolutely free. And it walks you through my 25K times 4 strategy and it includes a simple checklist to evaluate your first few deals. You can download it by going to the show notes for this podcast or going to passiveincomemd.com. Check out the blog post that corresponds to this podcast, and it's going to be in there as well. Now, let's do a little thought experiment. Fast forward to a year. You've received regular updates from all of the deals you invested in. You've gotten some distributions or you learned along the way. Maybe one deal's had some challenges, but another might have outperformed. Now you know even more which sponsors to trust, what questions to ask, what markets interest you, how to read a deck or an offering memorandum. Now, at this point, if you choose to invest $50,000 or $100,000 into a single deal, you're not just guessing anymore. You have data. You have experience that you can rely upon to help you pick that deal. You're operating from a completely different place. So to all the physicians out there sitting on 100K, of course, it's a great problem to have, but you're wondering what to do. Start by diversifying. That's my suggestion. That's what I would do. You've got to figure out your own way because this is not the only way, but it's one of the smartest ways. Because again, you can lower your risk. You can increase your knowledge. you can accelerate that learning, and then you can make smarter decisions down the line. I believe that investing in real estate or any other investment is not about swinging for the fences on day one. It's about stacking those smart decisions over time, and those will compound and help you get where you want to be. Now, if you want to take a deeper dive into how to evaluate these deals, maybe you want to figure out how to pick the right sponsors or ask them the right questions, or learn how to do the due diligence for these deals with confidence, check out our signature program, Passive Real Estate Academy. It's where we teach and coach physicians how to invest with confidence in passive real estate deals like syndications and funds, even if you're starting from zero knowledge. You check that out at passiverealestateacademy.com. In any case, thanks for listening. Hope you enjoyed this one. I'll check you out in the next episode. Thanks so much. Bye.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.